I am I am honored to be part of this program and participation in there. And as Yasmin mentioned, all of you will be receiving this presentation, not just the slides, but also everything that I am going to be talking to all of you, and everything that is going to be mentioned is going to be in that PDF presentation. So you guys can focus in understanding, you guys can focus on looking over, marking to say, okay, any questions that you may need to have. I also want to say to all of you that English it is not my first language. Therefore, if I say something that you may not understand, please raise your hand within the system. I will be very, very happy to either repeat it, clarify it, or make sure that you guys understand what I am referring to this process. Okay, this class or this training is about maybe an hour and 50 minutes, depending on the number of questions. Please, please, please do ask questions. We are all here professional. I learn from you as much as you will learn from me. Therefore, the questions and the items, I don't mind it. I actually love when the people that ask the question because that represent challenges and issues even for me and for everybody to understand that sometimes they are not 100% rules into these issues. So please, during the class, during the process, think about your questions. And they are not a stupid question. They are just questions. Please make sure that you ask them. At the end of each slide, I will be pausing and asking, does anybody has any questions? Okay, and then raise your hand. And Yasmin, it will help us to moderate the questions, okay? And you can either type it into the chat or you can directly ask your mic to be open, okay, in order to ask the question. Okay, with this process, I will just then immediately start in here. So, as part of the introductions, as many of you are in here, I assume that all of you are either a small business or medium-sized business, people who are looking to own their business, okay, there might be different ways, and you are all involved into what we call government contracting. So what are the most common things when we have our own business, okay, is that usually we have two things in mind as we start the process. One is taxes at the end of the year. How much taxes will I have to pay, or how much taxes will I receive back, etc. And the second part, especially in the government contracting, is compliance. Yes, when you are in government contracting, you need to understand that compliance is a big issue. And it's probably is going to be dominating most of your G&A process and everything that you will need to understand about compliance. But in addition to that, then how do we manage those compliance? What do we do in order to say about these things? Okay. So the most important portion of it is to understand that, okay, yes, you are going to go over from one compliance to another. You need to become familiar with what is called the Federal Acquisition Regulation. Okay. And on top of all that, yes, you have to manage your company. Okay. And most of the time you're going to hear from people, yeah, but we are small, we have so many things. I don't know, we are too small. I don't think that we have all these levels to do all the necessary planning, etc. But you have to take the time, you have to take the process to do it. Okay. And that's why we normally recommend that people get, especially once you are sure that this is the business that you like, that you are in place. Okay, and then you go above 2, 3, or 4 employees, that you will start with what is called an enterprise resource planning, or ERP, to do this, your system. Remember, government contracting is subject to a lot of audits. And in fact, I'm going to tell you, the more you grow, the more you get into, you're going to go from audit to audit to audit. It is the most audited business that you are going to find out. But knowing and understanding the business and knowing all the items that you have to go in there, and looking at the growth process, that is what you need to take into consideration. The graph that you see there is from 2020, and it just let you know how many business generated, okay, based on the project ERP. ERP stands for Enterprise Resource Planning versus a generic business, and how well they grew and how much, okay, they were able to assess and address all the issues that they had, okay, for their company. Don't worry about the graph. Okay, remember, you're going to receive this into a PDF. And in here, you are also seeing, okay, projected growth rates by project ERP base. Notice that at the top, there is something that is called an incurred cost submission, in which a famous office that you probably have heard by now is called the DCAA audits. Okay, anybody that is involved in any company that is doing contracts with the Defense Department is going to be very, very knowledgeable and understanding what the Defense Contracting Audit Agency, which is in charge of auditing all of the contracts as necessary when you are part of the Department of Defense. Even some agencies that are not part of the Department of Defense will hire DCAA to conduct audits by them. If they don't do it, it's probably because they have their own auditing offices. However, DCAA, because the Defense Department handles the largest amount of contracts among all the different agencies, probably with the exception of Social Security, but Social Security issues are not contracted. Okay, they are the benefits that all we receive due to our taxation. Okay, they tend to lead the interpretations of the FART regulations and the different agency regulations that you have in there. Notice that everything in here, accounting system pre-award or post-award, the 1408, the billing provisional proposal audits, labor floor check, purchasing system, property system, everything is related, including if you have been involved in building something that is called an EVM or end value management system. Okay, here at the top, you see the annual revenue between 0 or less than 10 millions. Okay, how frequently and how big they are in that sense. So with this in mind, okay, then let's start going over, okay, why a lot of these issues are important. So let's understand your company financials then as a government contractor. When you become the difference between a regular commercial and a government contractor, is that a commercial contractor normally, and if some of you may have already started or are continue to using the so-called QuickBooks, which is the most common entry accounting system that everybody follows, software. Okay, you're going to have your revenue, your cost allocation, a cost of goods sold, then overhead, profit or losses, taxes, and profit after taxes. That's the most common and regular allocations that we all learn, even when we go over into any class in accounting in general. Now, once we start doing into the government contractor, the allocation start to be, slightly different. However, they all mean the same. Revenue, cost allocations, we're going to have direct cost, fringe, overhead, G&A, expenses, unallowable G&A, and then the profit fee. It's a little bit more expanded in there. In the commercial world, everything that we do as part of the overhead and G&A, we call it overhead, is interchangeable, not in government contracting. It's a pretty big difference between overhead and G&A costs when you are into the government contracting arena. An overhead cost is the cost that you have in order to manage your existing contracts. Therefore, if you do not have any contracts that you are working on, theoretically, you will have no overhead costs. A general and administrative, for short, G&A, we're going to be referring in here to, are the costs that you have in order to keep you in business. Therefore, contracts or no contracts, you are always going to have G&A costs in this case. Now, some of the G&A costs, the government may consider to be allowable or unallowable. And here is the issues and the premises. once you are a government contractor, the premises is that the government agrees as the largest buyer of goods and services in the world to reimburse you for all of your costs that is considered allowable and fair. And then you can add some profits on top of those costs. Therefore, they don't want you to go out of business. They actually want you to be extremely successful in business, but they also want you to be very, very succinct and very understanding on how you allocate the cost because they will audit you. Remember, when you receive a contract from the federal government, you are spending taxpayers' money, the same taxes that all of us are paying. That's what you are spending. Therefore, you have to be accountable for a lot of this cost. Take into account that what is going to be regulating your business and your cost is called the Federal Acquisition Regulation. And the Federal Acquisition Regulation has a portion in there, okay, that it is called the FAR 31. FAR stands for Federal Acquisitions Regulation. FAR 31 is contract costs and principles and procedures, especially for a small business. This is a page of the FAR. Don't worry, it's a pretty thick booklet, of course, written by attorneys, okay? Nothing to negotiate in there, but you have to follow them and you have to become extremely familiar. The FAR, it is completely free. You can download it from any governmental site that says FAR, okay, Federal Acquisitions Regulation. I always suggest to everybody download it, keep it in your computer, because then you can check out everything very quickly and how they relate to each other. You can also Google it, okay, FAR 31, and then you're going to find out all the different procedures and all the different items in there as they need to have. There are other federal acquisitions regulations that you're going to be seeing into your contract, usually the Part 52, which is called solicitations, provisions, and contract clauses. Most of the time, they are added by references, and you're going to see that a lot. A lot of time people say, yeah, but my contract is only 10 pages. Yeah, but 7 of those pages are, okay, requisitions by the government inserted by, by references, which is the Part 52. So I always tell them, you see the FAR, the Federal Acquisition Regulation, that is your contract. That's everything that you need to know and understand. And that is what is going to become your Bible as long as you are in government contracting. Every agency that hire you, including GSA, they also have their own agency regulations, sometimes in addition to the FAR. Okay, so you're going to find out, for example, in the Department of Defense, you're going to have the DFAR for Defense Federal Acquisitions Regulations that they are added on top of it. Some of them, you also have to understand that even certain agencies that are not appropriated from regular tax dollars, and I'm going to give you an example: the FAA, the Federal Aviation and Administration. Okay, they do some. They tell you, oh, we don't follow the FAR. They have their own acquisitions regulations, but all of them, when you read it and you compare it next to each other, they are practically the same at that level. Any questions so far?
No, Gregory, no questions as yet. Just like to welcome everybody who joined us and to remind you that this is being recorded and you can type out your questions for Gregory in the chat box.
So, continuing into this process, then once you start looking into your accounting costs and accounting everything, and remember from this process that you saw the strange overhead, general and G&A, etc., the best way to address this functionality is by doing what we call a pool concept. Accounting pool concept is not nothing new. It's not nothing specific to government contracting. It's something that has been in place even for more than 100 years as a general practice in accounting. Okay, now, usually in the government, in order to level the playing fields, we have done, okay, what the government likes and understand is to allocate the pools into what we normally call three different pools. And this applied mostly for service company, a fringe, an overhead, and a G&A. There are other pools. If you are even in manufacturing, you're going to have some manufacturing pools, some other intermediate pools, some other allocations of pools, okay, subcontracting handling pools, depending on the size and what you are managing. If you have to buy materials in excess and quantity, you may have a material management pool. And in some cases, depending on what you may need to do and what the government is asking you to do, there is a very pool that is not very frequent, but is very commonly used. It's called the facility capital cost of money. If you wonder if that translates as interest, yes, it is. It is literally, if you have to put the money to be held by the government, okay, for purposes of the government, then they like to call that the facility capital cost of money. And I'm going to give you an example. If you are manufacturing something and you are a large operator, let's call it that somehow you managed to get hired by the Air Force to build an F-35, well, you will need to buy a lot of equipment, a lot of stuff. You may need to hire, and lease a lot of places, and all that will cost money. And that money, you may need to borrow it, and that borrowing is going to have some interest, and that is when you may need to establish a pool called the facility capital cost of money, which is the interest, not just the regular interest that you pay when you are borrowing money normally, but specifically for those items. But for the simplicity of this class, I just want to explain you the cost of a lot of these pools, okay, but we were not going to get into details of a lot of those, okay, like subcontracting, handling, material management pool, which most of the time people tend to confuse both pools and mix them with each other, but no, they are actually separate pool, subcontractor and handling and material management pools, okay? So fringe, for your understanding, it is how much cost you have to provide as part of the benefits to the employees that you are hiring. Remember, when you get a contract, you are required to give them the full 11 federal holidays. You are required to pay them pay time off. You are required to pay them sick leave. You are also required to pay them statutory taxes, such as the employer portion of the Social Security and Medicare. You are also required to pay federal unemployment taxes, state unemployment taxes. In order to be competitive, you have to offer 401k, etc., in which the company may need to provide some portions in there, okay, to do the law of the land, still the health insurance, and you may still have to provide the health insurance to your employees, i.e., the company is going to be spending a lot of money in order to have your employees, including yourself, if you're planning to be, or you should always be, an employee of your own company. Therefore, a pool is nothing more than all the costs that you have as your numerator, and as the denominator, you're going to have all the direct plus indirect costs. When I mean indirect costs, it means all the costs that you are paying for the people to take care of your management, overhead, et cetera, that you have in there. That becomes the basis. So all the pools are nothing more than a key performance indicator of how much your pool is. It's usually expressed as a percentage. If you have a pool, a fringe pool that is at 28%, it means that for every dollar that you are paying somebody to work, you need an extra 28 cents to cover the fringe benefits that you are providing to them. Okay, so why is, for example, one of the most important pools, which is the fringe pool? Because the government will look at your fringe pool and determine the stability of your workforce. Usually, you may not know it, people don't work just for the salary. In fact, to most very good employees, the benefits that they are receiving are far more important than the salary that they are receiving. And in my experience here at GL Solutions, I can tell you that for every dollar of benefits that you provide to your employees, you can save up to $10 in salary. Sorry, in salary that you are having in there. So that's usually the importance of that relationship that you have in there. Okay, the overhead pool again is the cost that you use to manage your existing contracts that you have, including your PM, your program management or program management. If you cannot build them, then they become an indirect rate in there. The cost of doing background investigations or keeping and maintaining the clearances level for every employee in order to keep the training, in order to keep a lot of the different items. Okay, and the basis then is your direct labor plus the French included in there. And if you have any BMP process, also the business development and proposal and BMP process also might be part of the basis and part of the labor, because by the fact that you are using the same people that you're having into your contracts in order to develop new contracts in there. Okay, so therefore, the allocation methods of the pools is extremely important. Your G&A, of course, is how much cost you are taking to manage your company. That includes your job as the CEO of the company for the functions that you are doing as a CEO or any C-level of the company, plus the fringe benefits, plus whatever cost of allocation to the office, paper, telephones, et cetera, that you may have in there, accounting, training, et cetera, that you may need to have in there. Allocations of the pools and the methodology is very important. Now, the government cannot tell you how to allocate those pools. However, they have a pretty good notion on how you should allocate it. And the most important part in there is that you need to be consistent in how you allocate those pools, okay? Why you need to be consistent is because it is important to be stable. Whatever you do for contract A, you need to do it for contract B, C, D, E, and F. Now, you can start with a methodology, and in the middle, all of a sudden, you get a different type of a contract. Therefore, you need to change your methodology. You are allowed to do that. Yes, you can. You are allowed to make those changes, and you are allowed to make sure that you can make those level changes into your operations. But the important part is that you still have to be very, very, very consistent in how you allocate the pools. And yes, if you are in the audit with the CAA, you need to explain that to them, and they are going to do the testing, not based on what they believe, but based on the numbers that you are providing to them. And they are going to test all these matters based on those processes. That's why it's very, very important to understand that you are following a lot of these different costs and a lot of these different areas, and be consistent in that case. Any questions so far?
No questions.
Okay. So we were discussing, okay, why we group costs in pools. It's very simple. It's similar cost. A benefit is a benefit, okay, whether it's PTO, whether it's taxes, whether it's 401k, whether it's education, whether it's everything else, whether it's paying for your parking space at your office, or whether it's anything, everything is a benefit. And they want to know how much benefits you are providing to your employees as part of that. And that's how we determine the fringe benefit cost in there. Now, in certain cases, depending on how complicated or not your operations are, we may end up having what is called an intermediate and or final pools. For example, overhead and G&A are considered final pools because after you determine in there, okay, they are allocated, there is no further allocation. However, fringe pool, some people consider the fringe pool an intermediate pool because it has allocation to direct and then allocation to the overhead and to the G&A in there. There are other pools that you can create as a pure intermediate pool. For example, if you create a pool because you may need to have people doing work in your office and you may need to split the cost of leasing your office in two, Okay, so you may have two different intermediate pools, okay, and people call it the facilities and management pool in order to make the correct and fair allocation. Remember, correct and fair allocation of the pools, and that has to be written in your accounting policies, and your accountants and everybody else have to follow that process in there. That is extremely important, and that's why it is important to understand, okay, why we are having a lot of these costs and a lot of these items in there, and how are we supposed to manage that and understand. Take into account that specifically the government has three ways to give you contracts: fixed price, time and material, and cost plus. All of them involve your indirect rates. When you are submitting your proposal to the government, all of them will involve your indirect rates. Now, what's the difference between the three? You need to understand the difference is in the risk that you are taking. When you receive a fixed price contract, your company is taking 100% of the financial risk. You are supposed to deliver what you agree to deliver to the government. If it costs more or less, you are taking that risk. A T&M is kind of a shared cost in between the government and you in this case. And when I say the government, take into account whether you are a prime contractor, i.e., you are contracting directly with the government, or you are a subcontractor, i.e., that you are a second tier. So your direct client is actually another company that is the prime. Their regulations are the same. If your prime contractor did not pass these regulations to you, they are making an error and a mistake, because the government actually requires that the subcontractors have first, second, fourth tier, etc., have the exact same regulations, okay, that the prime contractor has. So when you're looking into this process, you need to make sure that they understand and that you understand how you are going to be establishing those pools. Okay, for example, if you are into a cost plus contract in which the government clearly say, we're going to be reimbursing you for all your direct and all your indirect costs, depending on how much stability they see into your contract, they may put limit to the indirects, in which they may say, okay, we see, for example, that your G&A cost is 14%, but those costs can go up, can go down. And they say, if it goes more than 18%, we are not going to reimburse you on anything above the 18%. So therefore, you're going to be still losing those items. And that's why you want to make sure that you are into a very, very good control of a lot of these costs. Now, especially when you are into a cost plus contract, the beauty of it into the cost plus is that the government is taking 100% of the financial risk. You are not taking that risk. However, the bad news is that the good news is that you're going to get reimbursed. The question is when, because it may take several years in order to get reimbursed, okay, about it. Okay, so that's part of what you need to understand, that yes, you're going to get reimbursed, but you need to understand by when you're going to get reimbursed for that, and making sure that you are making the right representation. If you do not have a good system that can track down, you do not want to be in a situation, okay, that I have seen some clients, and I'm going to go into the questions in a moment. I can see that you guys are asking and raising hands in there. I had a client who approached me and they says, we went into a 5-year cost plus contract. They hire an accounting firm that specializes in taxes to do what is called the incurred cost submission reports, which is the settlement of all the different indirect rate costs. And the person have no idea what he was doing, so therefore they submitted and they settled for a much lower cost when their cost was actually higher. I told him you should have been recouping about $180,000 for the last 5 years, but in the way that this person did it before, you might only be able to recoup about $20,000 in this last year. And that's all that he was able to recoup at that point. I do not want any one of you to be at that level in that case. So let's go for some of the questions that somebody has in there, Yasmin.
Okay. All right. First one is, when you charge for fringe, do you have to have health insurance set up for your contractors? And if not, would that be incorrect?
Excellent question. Excellent, excellent question. If you are including health insurance in your fringe pool, yes, you have to have that cost. The absence of that cost on purpose is very, very detrimental. And I'm going to give you an idea. About 10, 15 years ago, I had a client who approached us and they said, we want to be one of your clients. I normally have to do a light audit on them because if they are doing something that is illegal, I do not want to be out of it, just to let you know. And this individual was taking the practice to charge the government for the fringe of all their employees, while none of the employees, by the way that they develop their policy, will be able to have health insurance, a cost covered by them. That is stealing money from the government. And I told them that. If you become my client, I will have to immediately call the DCAA hotline and tell them. Now, two things. You can go ahead and put in your proposal that you are going to have health insurance and that you will be available to. But at the time that you win the contract and then you hire the contract, the person told you, very common, no, I don't need the health insurance because I have a great health insurance for my wife and I don't want to change. That is perfectly legal. That is okay. That is not a problem that you have. Okay, but you need to understand that you still have to keep that cost in there. You cannot just go over and then start adjusting, because what is called a life event can happen at any point in time. And he may say, hey, my wife lost their job or she changed or something like that. And then now I need to get my health insurance. And therefore you're going to have that cost right away. Because of a lot of these management issues, because of a lot of the stuff, that's why the government wants to make sure that your policies and procedures are good enough and they understand. They want you to make profits above and beyond to what you are looking in there. They are not looking to tell you you are not. What they do not want to do is to say that you tell the government, oh, we need to get reimbursed for the health insurance that we are providing, but we are not providing legally the health insurance to the employees. That's the kind of situations that you do not want to be. So I guess that should answer that question. Does that satisfy you, Nia?
Thanks, Gregory. Okay, next question. When would you make changes to the cost in your pool that would be allowed or still be considered consistent?
At any time that your cost structure is changing. That's the time that you are allowed to make whatever necessary cost in your pool is. For example, if you get awarded a contract and you are supposed to be working on the government side, and all of a sudden they tell you, well, we no longer have a space for you. We need you to take your employees and they need to work now on your side. They are changing your cost structure because now you need to hire an office, put the people to work in that office, and that will be increasing your cost. Even if it's not included in your original proposal and pools, those changes of structure can create what is called a request for equitable adjustment, or REA. Okay, and you need to have that very well identified. You need to then make sure that you are modifying your pools because those items will be the basis of the changes that you are making. Still, you have to be consistent in the way that you are allocated. If you have a contract A that the people are still working at the government side or at your prime location site, and then you have a contract B, then you may need to establish two different overhead, what we call overhead at the contractor side and overhead at the government side. And that's how you need then to start applying those pools. And you may need to have a clear explanation and the changes in your accounting system and how you allocate those costs, etc., and being able to explain that. perfectly legal, not a problem. And I have to tell you, because I have faced that. One time, even a DCA auditor told me, oh, you cannot do that. And I just simply told him, here is the FAR book. Tell me what does it says that I cannot do that. And of course, I want the file, etc., that you wanted to make sure. Okay.
Okay, thanks.
Uh,
There's one more question.
okay.
Cost plus contract, can you receive 100% of the interest regardless of the years?
If the facility cost of money was included as one of the pools and it's actually necessary, the answer is yes. Interest under the FAR 31 is a non-allowable cost. That's why the pool for related to interest is called facility capital cost of money and not the interest pool. For example, the interest that you do for borrowing into your line of credit to cover your regular operation is unallowable. Therefore, the cost of that is coming from profits. That's what I want to make sure. When I say something is unallowable, the cost is coming from profits. Okay, and that is very important, and hence the reasons of this classes, because now you are learning to manage your company to make sure that you are keeping your cost pools correct, to make sure that your cost is correct, because I have to tell you, any action that you take or any action that the government take affects the financing of your company, and your pools call the cost of your pools changes month to month. When you get awarded the contract, that's the items that you are managing, your pool cost. And it's important to understand how you are managing your pool cost, because that is what is going to get you, okay, the success and items that we are managing, that we are talking in here. Okay? Any additional questions?
Yeah, thanks. One more. The person said thank you for answering that question. One more question's popped up. Could you explain the details of a subcontractor that doesn't need insurance, but we built this into our contract with their salary? Do we need to adjust their salary and benefits?
That is strictly important to you. Now, I am not aware of any subcontractor that does not need insurance. Now, here, let's talk about it, what insurance means. If we're talking about health insurance, that is a function of what you are offering. And if you have employees, okay, again, and as I mentioned, the Affordable Care Act requires that you offer health insurance to your employees, and you have to comply with those laws. That's always what I say, that that the government, it is one of the most audited business, government contracting. I see that you type in there, it's military health insurance. You're talking about TRICARE. You still need the insurance, and if they don't have it, okay, you can then adjust your fringe rate for that purpose, as a matter. But does that mean that you are only going to be hiring ex-military people? It's possible, but you may be limiting yourself in that case, and that might not be a good employment practice in there. Okay. Now, in the other side, if we're talking about insurance such as liability, errors and omissions, etc., and other type of regular business insurance, you always need that. Whether the child we don't need it, I always recommend get there, because workers' comp is mandatory by any state and anybody that you have. Errors and omissions is also important because anybody can make any mistake and then you might be liable. Liability, general liability insurance is also, required that you have in there. You never know what kind of damage and access and issues anybody can have. So it is important that you are covered by all your regulatory and different level. There are multiple differences of insurance. Okay, including that in some cases, if you're sending people overseas and to some dangerous areas, you may actually need to buy in order to protect yourself, what is called kidnapping insurance. You may have not heard about it, but that exists and is extremely common to know and understand. Okay, some certain contracts, especially if this is going to be work outside of the US, you are also required to have what is called Defense-Based Act Insurance, DBA, in which there is a special rate that is actually negotiated by the government, okay, that you need to have, and it's all controlled, okay, by the State Department in that case. Does that help the question? Especially Lucretia?
Yes, yes, they said yes, thank you. So yeah, that's all the questions for now.
Okay, perfect. Okay, so then moving from the cost and pools allocation method, okay, here is the important now about how we are calculating the pools. Do we need to have a single or multiple pools? Yes, even in the fringe, you may end up with more than one pool. So I have several clients that have, two different type of pools because it depends on the class of workers that they have. The multiple pools are very common. For example, if you are in the construction services industry, where you may have some temporary levels, you may have some very low levels of people, and it helps you to price things correctly, okay? Because things can change between your part-time employees, your full-time employees. So you may have a brigade that is only related to pouring concrete or doing a scaffolding, okay, and they are not working all the time, okay, but in order to be in compliance and to be competitive, you may need to develop different type of pools. Okay, some people call it the high fringe and the low fringe, etc. Okay, in there, especially very common if you are into an industry that you may end up having to have union employees, and some of them are not union employees. Okay, overhead, as I mentioned before, you may have multiple type of overhead. One time I had a client that they have 4 different type of overhead, not just because the people are working in 2 different locations, but if you are into what is called a staffing business, that you are not providing that much value added, then your overhead will be very low. But if you are into what I call a value added business, then you may need to have some people into the background to provide support to those that are not available. Okay, so therefore, these 2 different type of overhead are also different in that case. G&A, there is the possibility, depending on the size, that you may end up having more than 2 type of G&A. Very, very common in very large corporations with multiple divisions, etc. Not that common within a small business, okay, because there are not that many ways or items that we can divide that. Other pools that we may use to structure, that we may need to structure, okay, the items, as I mentioned before, okay, yes, you have intermediate pools, you have subcontract management pool, you have, okay, material and handling pool, you have facility cost of capital, and they can all be. For example, I one time I had a client, okay, that was trying to develop what he called an IT pool. Okay, because he find out that the people in the company and the way that they were consuming the support for IT at a different level. Therefore, he developed what is called an IT pool, that it was charged differently depending on how the contract was used in there. All of them were done correctly. All of them were done, okay, in a pretty good way. And that's a way to understand, to make sure that they are all part of a regular pool and that they were consistent. Consistency in here is the information, okay? I see somebody asked questions in there, Angela. What's the average cost per month for a DACA audit? DACA, you mean the DCAA audit, not a DACA, correct?
Yes, I think that's what she means.
Okay. Usually DCAA will not come over and audit you there every month, unless you have a cost plus contract. If you have a cost plus contract, you may need to send to them during the first year, once you are awarded the contract, usually the first or 2 years, and how confident they become in your system, you may need to send all your invoices to be reviewed and audited by the DCAA, and they will give you an assignment of a person. Sometimes this person may come over to your office and sit in there to do the job because they find it easier to say, can you show me this support documentation, these other items, et cetera, et cetera. Okay, but a regular audit of your systems or eyes or anything like that, it has a cost. It just depends on how big or small your company is or your contract is. But yes, it does have a cost. Uh, for example, if large contractors, for example, the people who are building the F-35, okay, the Lockheed Martins and all these guys, they actually have to get an office specifically for DCAA because they sit those people in their offices, okay, in order to do the contract, not the cost of Lockheed Martin, but they bill for that. They probably have developed certain pools in there. Is that going to be the case for you? I doubt it. Most of the time they come over to your office and they will occupy maybe for a week or 2 weeks, depending on how exhaustive or extensive the audit is. They will be sitting in your conference room or in a spare room office if you have it in there. So I have never tracked it down because even the longest, and one time one of my clients had an auditor in there that was sitting for about 4 months every day into the office, okay, until he finished in there. But it was not a big deal because they have plenty of office space available in there. Okay. However, does it cost money? Yes. Your people are in there spending time with this auditor that they could be spending, okay, for other purposes and items. It's just how you allocate the cost and how you normally put it over. If it's a concern, yes, measure it. Because if the cost of the audit is taken too low, and I have done that with the CAA, we have an auditor, and the guy, in my opinion, was wasting time. I called the supervisory auditor. I'm saying, I need your help. He says, why? Because this audit is going nowhere. This guy's doing in here, doing math, items, okay, and the supervisory auditor the next day came over and told him, listen, you are not going to find a math problem in any one of these issues. You need to check for this, and then the audit then started to move along into that process. So you really need to know about that. Okay, and then of course, Angela Fairley is also asking about government audit approval system for services. Yes, the government will start any process. Okay, for example, prior of you receiving any cost plus contract, they want to make sure that your system can handle cost plus contract, in process. This is what is called a pre-award audit. And you normally have to file what is called a 1408 form along with the auditors, and you can actually check it out. Okay, check 1408 form. If you cannot find it, send me an email and I can send you a sample of it. Okay, in which you said, okay, how is your cost allocated, etc. And what they are actually auditing you on what is called the accounting system. Remember, it's not just the software that you are using. QuickBooks, for example, the QuickBooks as a software is only one of 12 to 15 components of your accounting system. A UNANET software and system is only one of those 12 different components. The most important part that they wanted to do is to understand how you are managing your accounting policies and procedures. And they're not going to go over with the accounting policies and procedures of a different company. They want to know the one in your company. And they wanted to make sure that it's making sense for them. Lack of having that, they're just simply going to say, we do not trust. Oh, yeah, but so-and-so is using QuickBooks and you approve it because they have a good accounting policies and procedures system. Not just the manual, but the system. Manuals is part of the system. The software is part of the system. You don't need to have any specialized software. You could actually have a bunch of Excel spreadsheets as part of your accounting system. And if it makes sense, they will approve it. They have to approve it because that's what they have. There is no requirement in there. Okay, there are certain other classes that I do that, okay, for this. You're saying audit software to use. They don't audit the software. They audit your accounting system, and they want to make sure. For example, UNANET, which is one of the greatest software, okay, that available right now. Yes, if you have a UNANET system, okay, they're going to probably approve you, etc. If you know how you are doing it, but they will never tell you, oh, UNANET If you get UNANET, you are into the other side. The government, no government agency, not the CAA, endorse any software. And I want to make sure, because I have seen people's and individuals that say, oh yeah, the salesperson told me get this, and then I am automatically approved. That is not true. And I want everybody to understand that. Okay.
All right, thanks. That seems to be all the questions for now.
Okay. So moving right along. Okay. So as part of the cost pool calculations, I would say single, multiple award. Okay, what is important? Okay, yes, you need to know and understand your pools, because you're gonna have part of that, okay, for your billings, okay, especially in the cost plus contract, you have to bill your direct plus all your indirects, and the sum and the way that you are allocating has to make sense. And you need to make sure that your billings, okay, are in conformance with that. When you get a first time cost, plus contract, remember, they are going to audit 100% of your billings. So if you're issuing billings every month, they're going to audit all of that. And you want those audits to go as fast as possible, because without the approval from the CAA, you are not going to get paid. If they reject that bill, that means trouble for you. You want that cash, and you want that cash to come in, okay, as fast as possible. That's why it is important to have everything correctly done in there. So now, from the management point of view, now, which is okay, what we are always talking about in here and what this class is all about. Indirect rates is not just for the government. Can I use this indirect rates to manage my costs? I am the CEO, and I want to make sure that I can grow this company correctly. So understanding my indirect rates and the pools, okay, and understanding as the company changes in terms of the structure, when do I need to get a new cost and a new pool? That is the most important portion. That's what we are hearing to these classes. You are having some contracts today, but you still want to grow the company, and you want to make sure that the company grows in a different way. So most important part is to understand, and if you take a look in here, I'm going to be using this graph a few times, okay, during the rest of this presentation. Everything that you see there in blue in there, I call it a backlog and a stagnant, because you have won already certain contracts. But remember, the contract is like a well. You are extracting water and you are extracting dollar value every day, and they start expiring and going down until the point that they may become zero, i.e., if you do not grow, if you do not spend any BMP money or anything like that, there is a point in time in 2, 3, 4, 5, 6 years that you may have no business at all. Then you may say, well, I'm only interested in keeping the business at the same level that I am. And that is the green area that you have in there. Okay, a flat scenario. So you are not growing above the $3 million level that I am showing there as an example. Now you wanted to have some growth in there. That's what the moderate growth show in terms of the orange line, or you may want to have a very aggressive growth. That it is what the red line simply show in there, that you may want to go from a 3 million to a $9-10 million in business in a period of 3 to 4, 5, 6 years. All that implies that you're going to be spending money. All that implies that your pools are going to be going wacko. And wacko means what happened when you spend a lot of money today in order to be in this level in here. Let me see, for example, I think that I can use this market. For example, as a laser point, you are spending money in here in order to get to any one of these points in here within the quarter, years, etc. Can you see the laser pointer that I'm using in there, guys? I just want to make sure.
Yes, we can see it.
Okay, perfect. So that is the most important issue that we wanted to do. Therefore, when you spend money in BDMP, is going to be affecting your overhead pool, and it's going to be affecting mostly your G&A, because BD and BDMP and BMP is part of your G&A pool. Okay, and second, remember, You may choose to bid into some contracts. Does that mean that you are going to get it? Therefore, make sure that you don't end up putting all your eggs, i.e., your opportunities, into just one basket. I have seen many small business to say, yeah, my strategy, I'm going to go over for this super huge IDIQ, and if we win it, we're going to become millionaires. Yeah, but you know how much will that cost you? All these pretty big IDIQs may end up costing millions. I'm not kidding you, millions to bid upon into it. And if some of you are familiar, for example, one of the most common ones that was awarded very recently, the Oasis, not the Oasis, the one from the HHS, okay, in which they put such a restriction that even people that were qualifying with 97 and 98%, okay, of rate were still rejected from the IDIQ. You know how much money was, what that means, okay? And do you have the way and the ability to make that money, okay, or to spend that money into a failure? Because literally can send your company crashing down. Imagine what happened if you are investing all this money to be in here and all of a sudden you win nothing and you are down in here. You have to start all over again now at the much lower tier basis. And trust me, I have seen this. As part of this, okay, you need to know, okay, what are the most recent issues that the company goes, okay, in there, and then you need to make sure, okay, as part of your business, your pools, how are you going, okay, what kind of a decisions you need to make, hiring and firing. Hiring is very easy. Firing is a little bit more difficult, not just on the people that you have into your contract, because those are the ones that are producing your money, but hiring a BD person, for example, how much is going to cost you? Resumes are really great. The people tell you, okay, in the interview, oh, don't worry, you're going to have so much money. 2 years pass by and the person has bring zero, zippo, nothing. Because trust me, government contracting is a very, very, very long-term business, and you need to plan accordingly to make sure that the decisions about the opportunities that come over to you about to bid or not to bid. Okay, that is one of the most important decisions. And even to bid or not to bid, I won't even say how to bid. It might be a great opportunity, but you may want to make sure that you are in there at the right level. Do you want to be there as the prime, or you want it to be there as a sub? 2 days ago, somebody sent me a great opportunity for us. And after reading it, I said, no, that's too big for us. I would love to be in that process, but as a sub, supporting whatever operation they're not as the prime, because we at GL Solutions may not have the money and the access to develop that. To manage your cash flow, understanding your cash flow, an increase in your indirect rates on a monthly basis. What does that mean? That you are spending cash for your RAP rate management. How many of you are familiar to what is called the RAP rate? The RAP rate, which usually come over in two different versions, okay, it is what we use, okay, to understand how much money you need on top of your direct labor. Okay, and that is one of the most strongest KPI, because you need to make sure that you are recouping the cash of the money for your business and to support your operation. Therefore, it is extremely important to understand some of those levels. Okay. Any questions so far?
No.
Okay. So can you give an example of industry average for RAP rates? Actually, you will have it on the package, the industry average, RAP rates. They are going to be included in the Exhibit A in the package. That's great questions, because this is important to have. However, understand something important. Remember what I say. People always ask me, what is the correct indirect rates that you need to have? I always tell them, depending what kind of a business you are. So to compare a staffing RAP rate for a business with you who are in the value added, you're going to go berserk and bananas. There are people also out there that provide information not based on any kind of logistical analysis, but they just say, oh, just put whatever indirect rates, whatever items in there. Okay, and then they bid, then they win, and then they cannot perform. In fact, I have seen things, okay, being awarded, and when I look in there, I say, yeah, this company will not be able to perform. 7 months later, you hear that, oh, they lost the contract. Why? Because they were not able to put a single employee to work in there. That is usually what tend to happen. And that's where you do not want to be involved. Because if you cannot perform on a contract, you're going to have a lot of problems in your CPARs. I'm not sure if you are familiar with with the CPAR, which is the contractor performance rate that your contracting officers, and nobody may want to give you a contract, okay, that after for because you are just showing that you cannot perform. And yes, everything in here is supposed to be very professional, very accurate, very well managed. But there are many people in there who just juggle it out, and they say, "Yeah, we won. That's a great news." You see, and they say, "Yeah, because we were the best." And I always tell them, "Are you sure that you were not just the cheapest? And second, by being the cheapest, can you perform after being so cheap?" In this case, okay. I hope that helped you. But yes, you're going to see some of those RAP rates examples, in there. Now, people always says, how do you calculate the RAP rate? Well, here is a page that tells you everything that you need to know about the RAP rates. Okay, the importance, okay, is your cost direct plus indirect, okay, and equal the RAP rate without fee. And then the RAP rate with fee is that when you add the fee. Look at the bottom where you see FR, or, OH and GNA. Those are your overhead rates as a percentage, okay, of everyone being calculated in there. So it's a functionality and the value added. Now, this is assuming that you're using what we know and call the standard, okay, of overhead rates, the standard issues that people may want to understand as this process, okay, between the fee and a no fee basis in there. Not necessarily mean, because if some companies allocate their rates different than what you are, then comparing them to yours is going to be a misnomer, i.e. that you are comparing apples to oranges. They are both fruits, but they are two completely different fruits. Therefore, it's very difficult to understand that in that cases. Any questions related to the RAP rates?
No, I don't see any coming through.
In here, you're going to be seeing, okay, what are the different challenges that most company has, especially when it comes over to audits. I just added this page, very recently as part of the understanding, okay, on how the different rates, not in that the audit challenges is the top item issues on any company at any size, okay, about the different rates, business system, timekeeping, billings, unallowable costs, cash compliance. Cash is mostly for large business. You may not need to worry what you are in a small business so far. And of course, executive compensation, because it is limited. Executive compensation means any one of us, the owners of the business. They want us to get as much as we need to as part of the profits, but as part of the salaries, they want to limit a lot of these issues in there. And then you can see the trend on how these issues has been changing over time between 2019 and 2022. Okay. See a question in there from Tosin. What's the recommended system a company should have to ensure that they can comply with indirect rates compliance? Again, the system is developed by the company. I'm not sure if you're referring to the correct software, which is one of the components of the system. You can do it with the QuickBooks, you can do it with Unanet, you can do it with Deltek. They all have different costs embedded in there. I can tell you because, for example, QuickBooks is a very low cost of entry. We all start with the QuickBooks, but it's a very, very difficult system to maintain in a full compliance for government contracting. Therefore, you are exchanging manual labor for what the system can do, okay, for you. We've been using Unanet, okay, for most of our clients. We still have some clients in QuickBooks and some clients using the old Deltek system, Deltek GCS. Okay, but I can tell you, for example, that once we brought clients from QuickBooks to Unanet, the cost actually, the overall cost, okay, including licenses, uses, okay, assistant, okay, and actually ended up going down at that level. But again, there is no system. You cannot buy a system. You have to establish a system within your company, and that include establishing policies and procedures for timesheet, payroll processes, human, benefits. In fact, in any audit that you go with the USA, with the DCAA, that's the first thing that they tell you. Can I see your employee manual? Your employee manual, your process, your accounting process. They don't start looking you at your software. Okay, now they start looking about what is the policies, processes that you have developed in there. Okay. I hope that this helped in that case. Okay, so the next step is about then understanding regular KPI. KPI, of course, as mentioned before, stands for key performance indicator. Okay, so what is going to make me competitive in the market? Similar companies, make sure that you have the verticals, expanding the horizons above and beyond and today. And as you can see here, you have also some other levels. This is also from the Unanet Guts report, okay, about where you may want to be, about the different indirect rates, okay, as part of the percentages, and then how is the wrap rate. But remember, don't try to fool yourself. Oh my God, we are too high or we are too low about this, because this mixture may not represent the type of a business that you do. And that is the most important part. Important part is for you to manage your own company, and then you understand what are the different items that you need to have, okay, as part of the process, okay, to control and understand for your own companies in there, okay? So, and I want to make sure that everybody have that understanding in that case. Okay, remember, if you are in building software, if you are developing a software, you're going to be in a completely different business than if you are into the staffing business, where you are just providing individuals. Okay, you have no value added other than what the individuals can provide in there. Okay, that is what is going to show up and determine your right indirect rates in that case. So we can then continue about the different KPI management that we need to have in here. Okay, because it is extraordinarily important to show, especially when you have, okay, well, I am in business. I already got the contracts. Now I need to get a loan and a line of credit. How will all these matters and all these issues are going to affect that process for you? Well, remember, managing your indirect wage costs is telling you how you are spending your money and how efficient you are spending your money. When you go to a bank and you say, hey, I need a good line of credit, okay, I can tell you that all of you are going to need that. In fact, some government contracts requires that you show that you have the ability to obtain a line of credit, because they know you're going to need a lot of cash. And if you are depending on using your money with somebody that is doing factoring can give you really, really quick and fast cash, but they are going to be taking your entire profit with you. They use a lot of gimmickry. They use a lot of stuff, which is normally not good for that purpose as a matter. Okay, but it is one of the most expensive way of financing. However, can they give you the money if you need to make payroll tomorrow and you only have the options of the factoring? Yeah, you may need to go for them, and you may not have any choices at that moment, that level. So, but when you are managing your pools correctly and using them to understand how you are using that, including the cost of credit. Remember, cost of credit is unallowable. Okay, interest is unallowable cost. Therefore, managing your indirect rates and making sure that when you say I'm putting the 6 and 8 and the 10% on this contract's profit, you're going to be able to be covered extraordinarily well in there. That is what you are looking for. Therefore, what do you want to make sure in there? In this case, in here, as part of your KPI financial management, when you are looking for any bank, companies are going to be looking into what is called your debt service coverage ratio, or this DSCR, which is part of your net operating income divided by the debt services that you're going to be carrying. That is part of managing your risk. That's a cost management. Therefore, if you manage your indirect rates cost and you know that you are operating at a profit and you know that you are operating correctly based on what you are projecting into the future, you will be able to cover your debt service. On a regular basis, any bank will tell you, okay, that your debt service coverage ratio, the higher it is, the better off you are. Normally, they're going to be looking at the debt service coverage ratio of 2 or above. 2 means that you have twice as much cash to cover your debt. And that's all what they are looking for in there. Okay. Now, the other item important in there is also, your financial aspect. Okay. How healthy your company is. Okay, and they're going to be looking into what is called your current ratio, which is nothing more. If you know your liability and you look at your balance sheet, you have current ratio, which is everything that you have either as a cash or converted, quickly as a cash, which is part of your accounts receivable and your inventory, divided by your current liabilities, which is how much you owe in the short term, including payroll, accounts payable, etc. So they're going to be looking at that relationship too. In that relationship, they want to make sure that this aspect is always above 1. The higher the number, the better off you are. And that's part of what you're looking for. Think about it now when we were talking about all the indirect rates, that if you program your company, if you plan your company accordingly, and you make sure that you are winning all your contracts because you are pricing and understanding your costs correctly and making sure that you are bidding on the items that you can spend the money and then see the positive result, that is what you want to have. Okay, and remember, all of this is taking into account all the growth, the same growth that we were discussing, the aggressive, moderate, flat, and the stagnant. Also, another formula they're going to be looking is the total assets, or total liability to total assets, okay, in which, of course, they want this to be as low as possible, okay, and how all that relates to your potential growth. Remember, I told you, we're going to be showing this graph in here, okay, because in order to get this, you have to spend money. And spending money is not only going to affect your indirect rates, but it's also going to affect all these different financial ratios in here. So it's a process that you have to manage. It's a process that you need to understand very well. Okay. I can tell you that many people think, yeah, I want a contract, I have a 5-year contract. And then all of a sudden the government comes over and tell you, well, we're going to terminate your contract for convenience to the government. You have done nothing wrong, but yes, we're going. At that moment, all bets are off, and all your indirect rates are going to be wacko again because the government is making some changes. You do have way then to request, okay, options and say, now you are upsetting my operations, therefore I need to make a request for equitable adjustment. And yes, you can do that, but it also takes time and takes system. That's why it's important to manage that, because that is what the government is going to be using in order to understand if your request for equitable adjustments are right or wrong. Any questions related to this KPI management?
No questions.
Okay. So then understanding, of course, you're going to be also preparing budgets for your financial management and operation. You need to make sure that you are projecting your profit and loss and contract projecting new indirect rates. That's what you're going to be using when you price to win for your growth. The structuring new indirect rates for better financial management. Yeah, as you grow, you will need to hire people. You will need to hire companies. You will need to spend money in order to make sure that that money is done. Don't forget about it, that you want to make this entire thing a reality. Okay, and this is nice to say, but nothing in here is guaranteed. Absolutely. Even if you win, they still can take the contract away from you. I've seen it many times. Nothing that you did wrong. It's just termination for convenience to the government because they say that they no longer do need this. This is what is important, that you manage, understand, and deal with all your financial. You need to make sure that you follow all your bid, no bid analysis based on your current and understanding of indirect rates, how you are today and how you are planning to be tomorrow. What happens if you win? What happens if you lose? Many people then go over and do what the price to win. Oh, this is what we need to win. Yeah, but if you win that, are you willing to go over and start subsidizing the federal government because the cost to perform in the contract is more than what you're going to be receiving in revenue? That is part of what you need to make sure that you go through this entire process. Any question before we move to the last slide?
No.
So in conclusions, managing your indirect rates is extremely important because it's what creates strategic positions and growth for your company. You need to understand all the financial impacts, and it's in essence what you're going to have as the main decisions for any bid or no bid in any new contracts, or decide whether you want to be a prime, whether you want to be a sub. That is key, paramount into this process and to in here. So to have that level of understanding, to know and receive, okay, where you are at any time, it is to the most important portion in there, okay? So understand that if you are managing and you are dealing in there and all of a sudden you find out that your overhead is too high, then you've been bidding at an overhead of 18%, but your indirect rate say that your overhead is at 28%, you have to do something to change, okay? And not a gimmick, but you may need to make some changes. You may need to have understanding, okay? Are you using the people correct? I'm going to give you an example. One time when I became a CFO of a company, they were having a lot of problems and they were having a lot of WACO issues on the indirect rates, and they were structured and they were very well and they were doing all the contracts in their office. But what I find out as I am looking about all the indirect rates is that most people were spending the time and the money on items that were not productive to the company, i.e. they were spending too much time in overhead and G&A and not in direct. So we have to change the directive and tell everybody, you are here to work into this contract, not to entertain somebody else. Oh, but they asked me for help. Then you need to learn to say, no, I cannot help you because I have this responsibility of the job. And then we issue a policy directive where everybody needed to be between 80 and 90% direct labor, not indirect. So we just changed the way that we were managing the people, and that changed the cost. And immediately we saw positive results, as part of the company. That's the important portion that you want to have and understand, because it can affect your G&A, it can affect this item. So with all these items, etc., that's okay. This is on, the what concludes this seminar. Now, let's see if we have another question in here from Tozin. Is it possible for contractors' first federal government contract to be cost reimbursable, or do you tend to see people getting fixed price contracts early on? Most of the time, there is a possibility, and I have seen very, very, very rare to get a cost plus contract, because you need to show the government that you know what you are doing, okay, in that pre-award audit. That is true. Now I have to tell you,
most of the times what I have seen is that they are like new companies, but they are kind of like a spin-off of another company. Okay, so i.e. that the people who get to go in there are very well trained and very well developed from different prime contractors that they just decided to incentivize and he gets that place. Is it possible? Yes, it is possible. Okay, but it's not common. It is not common. Most of the time, the government likes to give you a contract that is usually fixed price for the first time if you're going to be prime, or a T&M type of material basis. You need to understand that that even the FAR has certain regulations about how to deal with that. Okay, when it comes over to, they cannot just say, oh, we want to give you this contract as a cost plus. No, there are regulations that they have to follow for those items in there. So if your company is too young and they may not merit the issues for the government to receive that very first as a cost plus contract, they may pass on, because the government is not on the business of taking risk with you. They are in the business to minimize the risk. Okay. Difference between the PBR rates. What do you mean by PBR? And the end of the year, actual indirect rates. Okay. Oh, you need to wait. Yeah, you have to complete an incurred cost submission for that. It's not until you submit your incurred cost submissions and they get being reviewed by the agency that then you can then says, okay, they allow you, they agree with your indirect rates, and then you can start doing a request for the indirect rates reimbursement of that moment. Okay. It's just the ICE report, as we call it, the incurred cost submission report, okay, especially when they say it has to be submitted within 6 months of the end of your fiscal year. If you ended up in your fiscal year December 31st, you have to submit it by no later than June the 30th. But if you are ready by January the 30th, please go ahead and do so. Okay. That's just not a problem. Okay. The faster and the earlier you are, the better off you are into that sense. Just make sure that you are reviewing and agreeing that those are the different changes, because sometimes what the people say that they are doing or that they are expecting is not the same thing that that the government will see it as a correct one. However, the ICE report that you can download is also completely free. You just go to the DCAA website and you can see in there and download all the information on the ICE. It's a very, very complicated Excel spreadsheet. Remember, they're not looking for your revenue. They are looking for your cost. That's all that they are interested in at that moment. And they want to make sure, also, of course, that then on your billings and revenues that you are doing everything correctly in there. So you can download it and you can get it, into those levels and positions, understanding in there. Okay. This conclude. You have there some information about me and some information also about the Maryland Apex Accelerator. Now I have to get, I still have to move that, since there. And if anybody of you needs to contact me, my telephone number and emails are also into this last page in there, so you will be able to get us in contact. Feel free to contact me with any questions or anything else that you may need to in there. Any additional questions or comment?
No, I don't see any more. Thank you so much for that presentation, Gregory. Very detailed as usual. We appreciate it. And as Gregory says, I will be sending out this presentation. And as this was recorded, the replay will be available on our YouTube channel this afternoon. I will also send you the link to that. So feel free to, watch in your own time and share with your team members who may be working with you on anything related to this topic. So thank you again, Gregory. Thank you, everybody, for your questions and for participating. Just a reminder that your Apex Accelerator counselors are here to assist you. So please feel free to reach out to them at any time to schedule another appointment. So thanks again, Gregory. Thank you, everybody. Take care. Bye-bye.
Bye-bye. Thank you, everybody.